Welcome everybody to today's training session. Common trading errors that traders make in the market. Those include lack of education, overtrading, poor management of your money when taking action, not cutting your losses, and of course not having a trading plan as well. So we will be really honing in on those 5 common errors that traders make during today's session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, to name a few. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is at www.thegoldandsilverclub.com. Okay, perfect. Now, we will get right into it very shortly, guys, and we'll go through the bulk of content. Just before we do so, a disclaimer for you to have a read of, and then we shall get right into it. Okay, perfect. So we will cover the first common trading mistake, and that is a lack of education. Okay, so getting a good education when it comes to trading is extremely important. Beginners invest very little time in themselves. They forget that they're messing with an occupation that takes years to master, failing to attain the relevant key skills and knowledge required to enable yourself to achieve your full potential is one of the biggest trading mistakes of them all. So you really want to go out there and seek the best mentors and learn everything you can from them. Of course, study, read, watch webinars as you are at the moment, attend seminars, practice on a debt account first before you transition over to the account. Do really whatever it takes to get a level of consistency and profitability. If you don't have the time, make the time. You never know which one will be the eureka moment and really be a catalyst for you to start making consistent profit. So of course, you've made a great step towards your trading education to come on a webinar like this today, and then around that you want to be reading, you want to be studying, you want to be attending seminars and practicing as much as possible your trading. The second most common trading error traders make is over trading. Okay, so we've all heard of it. Traders over trading, taking on too many positions, overexposing your account, and this can often lead to failure in the markets. Most traders, they don't make money in the markets over the long run for one simple reason, and that is they trade way too much. So traders who overtrade, they tend to be operating on emotion. If you have a no trading plan and you've not mastered a trading edge, that is considered also over trading. You want to be executing a very clearly defined trading plan when you are in the markets. Essentially, you need to know exactly what you're looking for and then only trade when your edge is present. Trading too much causes you to lose money a lot faster. Essentially, it turns into gambling, and you want to be taking a calm and calculated approach to the markets and not speculating. So you want to have a trading plan. Now, risk management is critical. So being able to know how much you want to be risking per trade, what your overall exposure is in the markets, particularly if you're trading several different asset classes. There's a lot of correlations between different markets. So you want to be making sure that you're not over risking your portfolio at any given time. And you also want to know how much you should be risking on every single trade. So the management of your risk is critical to achieving success in the markets, particularly in the longer term. Managing your risk involves controlling your risk per trade to a level that is tolerable for you. Most traders, they ignore the fact that they could lose on any trade, and if you know and accept your risk up front, then you're not going to be risking more than you are comfortable with losing on your trading account. If you just bear in mind on every trade, there is a possibility that, of course, you could lose that position. It will put you in better stead for managing your risk when you're taking a trade. Many traders, they make mistakes time and time again. The mistake of risking too much money on a trade. It only takes one over-leveraged trade that goes against you. So one large trade which doesn't go in the direction that you predicted or you set out for that trade to go, to set off a chain of emotional trading errors that goes on to wipe out your trading account. As you start getting emotional, you try to make back the loss, and this can very turn your account into the negative and ultimately wipe out a lot of your gains, if not worse than blowing up your account. So management of your account, the risk management of your account is absolutely critical when you're trading the financial markets. And it's a mistake a lot of traders make where they're not calculating the correct amount of risk before taking on a position. Now, a very common mistake as well that we see a lot is not cutting your losses. Now, one of the most dangerous trading misconceptions is that you can ride out any storm and turn a losing trade into a profit. Now, I'm sure for those of you who've been trading for a while, you will have times you have experienced that where you've gone through a losing position, but you've stayed into the trade long enough, and ultimately in the end, it's managed to turn around and turn back in your direction. It can happen now and again. The problem is when it doesn't happen and you catch the wrong side of a losing trade and you allow that trade to keep going against you, and ultimately it can affect you psychologically, it can affect the overall account because it limits your ability to take on new positions, whereas if you just took the initial trade as a loss in the first place, you would then be over it relatively quickly, small loss, move on to the next trade. But when you start holding on to a large losing position that can increase and increase, it will affect your emotions, it will affect the trading account, and it might not ever go back into your direction. The one time where the market just continues to sell off constantly, if you try to catch the wrong side of a trade, especially if you've caught the opposite side of a market, whether it's a bull market and you've gone short against the market which continues to rise, or you've gone for a buy against the market which continues to fall, that is a way of also making an error in your account that you want to limit, absolutely. So placing stop orders before you open a position is important so that you know beforehand where you'll come out of a losing trade. Of course, the benefit of binary.com is that you know your risk up front when you're taking a trade. So you know what the risk is, and you're not really going to be in such a position where if you're in a trade which is losing, you're not going to be moving your stop loss or making too many changes to that. It's locked in. That is the benefit of actually having binary as an additional tool in your trader toolbox, in that the way that we trade with binary is very simple, it's very clear cut, and we'll talk you through that very shortly when we look at the higher and lower type of trades. It's also very important to keep a trading log of all of your positions so you can go back, you can review which trades went well, which trades that you might have won, which that you've lost, analyze those, see what you did right, see what you did wrong, and continue to progress. I mean, you want to be doing this on a regular basis, if not every day, on a weekly basis at the weekend, having a look through all of your positions from the previous week and seeing what sort of gain that you made the previous week, what you did right, what you did wrong, making adjustments as you continue to progress as a trader. Okay, also create and of course stick to a trading plan, so where you outline your trading strategy beforehand, which really takes the emotion out of the decision. You've already done your research beforehand, you know which markets that you want to go into, you know your entry, exit, your take profit levels, you've done all of that prior to getting into a trade. It's much better than if you're making an emotional decision because you've very quickly seen a market go. You don't want to miss the trading opportunity. It's much better to have that trading plan in place already and know what your strategy is. So, of course, the fifth common trading mistake here is not having a trading plan. So that is very important. Not having a trading plan is perhaps one of the most prevalent trading mistakes out there. Many traders seem to think they will create a trading plan later on, or after they start making money, or they simply don't need one, or they can just keep it in their head. But a lot of the time you do need to actually have it properly written out, documented, so you know exactly the reason that you're getting into certain positions. You know when your strategy is confirming a buy or a sell. And if you don't have a trading plan that details all of your actions in the market, as well as your overall trading approach and strategy, you'll be far more likely to operate emotionally and from a speculative mindset. Beginner traders especially need a trading plan in order to have a concrete way of trading, and also to have a trading strategy that you have created as a guideline, which gives you principles, gives you an edge in the market, has set rules as well that you can use to trade the markets and keep you cool when the markets are certainly going through periods of intense amounts of volatility. You can keep your head if you know that you've got a plan up front, you know what you're doing is correct, you know you're managing the right amount of risk, you know that you've got an edge in the market for buying or selling, and you want to be physically writing out that trading plan and reading it on a regular basis to make sure that you are keeping on track to achieving the goals that you set for yourself. So really the trading plan allows you to do that, allows you to keep yourself accountable. You want to have your objectives in there, you want to have your reason for trading, why are you trading the markets, what sort of percentage gains are you looking to achieve, what is it that you want to do with the money, is it to create cash flow, income, is it to have a nest egg, is it to increase and compound your savings, what is the purpose for you trading? And having a more concrete idea and a plan structured out will help you just to be a better trader if you've got a very clear understanding of the reason that you're trading the markets, and also a respect for the markets and the amount of time which it might take for you to become a very profitable and consistent trader, unless you're fast tracking your results through a mentor or a company, of course, such as the Gold and Silver Club, where you can also access training materials and get access to live trading rooms and the trade setups that we are taking and so forth. That will really help fast track your progress. But having a trading plan is very important. Okay, so as we mentioned before, when you're using the binary.com platform, there are two types of trades that we look at, which are very straightforward implementation. Okay, so we look at two types of trades, and those are or lower. So simply, if you select higher, you win the payout if the market X price is strictly higher than the entry price, and if you select lower, you win the payout if the market exit price is strictly lower than your entry price. So just to put that into three different criteria that you want to utilize when taking on a position. First of all, you want to get the direction right. So of course, we want to know whether we are buying or selling. Second, you also want to get your timing right. So you want to enter at the right time. And then thirdly, you want to have your exit times right as well. So with binary options, you are, of course, making sure that you are coming out of the position at the correct time. You're already putting that out there, the amount of time that you wish to put into your trade, so how long you want to be before the trade expires, and that will also help you to take advantage of especially some of the larger volatile markets, but also smaller moves. So if you think about it like this, when you take a binary trade, the market only needs to close 1 point in your direction for you to win the entire trade. So that helps in the context of you don't need to necessarily catch hundreds and hundreds of points in the trade. You just need to be right with the direction for it closing 1 point within your given direction, which is predefined. The other point there as well is when you are taking a binary trade, you also allow for some trades which have got a lot of volatility. So for example, you can trade platinum and palladium on binary, and these are volatile markets which have big daily ranges of 300 to 400 points. Now, normally putting on a stop loss with that sort of volatility, where you need to pay often a lot of platforms a large spread, having binary available to take a position means that you don't need to pay a large spread on the trade, and it also means you can ride out a lot of volatility. You don't have to have really large stop losses in place. So those are some of the benefits that I definitely see as having this binary.com platform as an additional tool in your trader toolbox. So with that said, let's have a look at the markets. We're at the UK. In the UK at the moment, it's about 7:15 right now. Some of the markets are closed for trading on binary, some of the commodities, a couple are open. So gold and silver is open at the moment, platinum and palladium as well. Oil, I believe, is closed for the day for trading on binary. We'll do some analysis. We'll talk you through the precious metals and energy, some of the opportunities that we see as we progress this week and as we progress through October as well. And as always, guys, we shall take any questions you might have too. Okay, so with that said, I will just move it over to my charts and we will have a look. First of all, we'll have a look at gold, and then we'll move it over to silver, platinum, palladium, and of course, oil as well. So first of all, we'll have a look at gold, the weekly chart first here, which I think is quite interesting. Given where we have closed what is known as a candle here, where it's completely within the range of the previous week's high and low. Now, typically what you would see is a breakout in either direction would give rise to a short-term trading opportunity. And we've got very close now to the highs from last week, which is sitting at 1,265 US dollars per ounce. So essentially, if we were to breach above that level, I would see short-term gold moving back up to the 1280 to 1300s in the short term. Seem to be closing the day near the highs here. There's been a lot of anticipation that either break support or would break resistance over the last week. Gold has continued to hold on to 1,250 US dollars per ounce here, and you can see that we're getting supported right now at that level. I would be watching this level overhead very closely here. It looks like we have the best close that we've had on gold since non-farm payroll. On the daily high basis, you can see it popped up here to 1,264 US dollars per ounce and 78 cents. If that pops above 1265, that's likely to get a nice move back up to the 1272 initially. Then I'd look for a move up to 1280, possibly 1300. So we've definitely got this formation in play at the moment where I am looking for a short-term breakout to the upside here, especially if we close around the current levels. If we close around 1261, we'll probably get bid up during the Asia Pacific session. What we've tended to see over the course of the last week since non-farm payrolls is that gold gets bid up overnight during the Asia Pacific session, and then during the London session and during the US session, it gets sold into again. And this has been quite common, but today looks like we're actually going to close near the daily highs, where if we breach above that level overnight over the Asia Pacific session, we could see some good follow through in the short term. So I do think that bodes well for a potential buying opportunity. Should we get into, or should I get into a position right now on gold around the 1260 zone? It still has the potential not to break that resistance and roll over and sell. So until it breaches that level, I'll probably hold off getting into a position. But if it does break above 1265, I'm looking for a buying opportunity. So if we do break above that level, that is the zone that we'll look for a buy. So now moving over to silver chart, whole of last week, we formed a pennant formation where the price structure was getting tighter and tighter right into the apex of that pennant. And today we finally actually broke out of that. So that's encouraging for silver here. And what I would look for next would be a break above last week's high here. So again, if we go out to a weekly chart, let me just show you this quite clearly. The pennant formation, which we've broken out of now for silver, and what we'd be looking at next would be a move above the highs from last week's on-farm payroll. The breach of that level is really like to see. In fact, there was just over a week and a half payrolls, and the move that we created last week was in an inside candle. So you want to look at this as an opportunity to trade breakout from this range. So if we do get a break below support, and particularly if silver was to break below 17 US dollars per ounce here, back towards $16, that is the level of support which goes back to the May lows. Now, on the flip side of that, and you can see just even on a raw chart, even without me going into complex indicators here, you can see just on a raw chart how straightforward this is. If we do get a break above $17 and about 85 cents per ounce here, that will likely give a move for the 1850 zone. I would expect a rotation back towards that zone. The longer that we consolidate, the more likely we are to see a significant pop once we finally break out of support resistance. And I'm watching this very carefully because we've been moving within a very tight range. If you look at this on a weekly basis, these small moves like this often are preceded by rather large moves, big breakouts. The longer gold or silver consolidate, the more time it gives traders on pending orders for a buy, pending orders for a sell, and often you an explosive move off the back of these consolidations. So I would definitely look out for that at the moment on silver. Again, if you break above about $17, look for a buying opportunity above that zone. You've got clean air above, we'll take it back up to around $18.50. Also watching oil very carefully at the moment in the chart structure, we can just look at a raw chart to give you an idea following on from the OPEC announcement, which was about 2 weeks ago, where we saw oil rise over 10%. OPEC is looking to reduce output, and that could catalyst at the 30th of OPEC meeting for a big move higher yet again. Off the back of that announcement, the OPEC meeting at the end of September, we saw a 6% move in one day, a 10% move over the following 2 weeks. We caught the whole move back up to the $52 per barrel high here. Now we're consolidating at this zone, and you can see the price structure is getting quite tight here at the moment. So we're getting tighter and tighter. You've got another pennant formation here. And what I'm looking at here again is for a possibility of a breakout trade. So either to the upside for the next run up higher here, next leg up higher on oil, or to break below support, roll back down again. And I'm looking at buying opportunities between 48 to 49 US dollars per barrel. That would be a nice opportunity to add to a longer term position here if we were to pull back to that zone. Otherwise, if we just consolidate and then break back above 52 US dollars per barrel, or if we get a close above this recent pennant, I would also look for an opportunity to go long, to buy oil here as we progress towards the end of November OPEC meeting. So oil at the moment is also firmly on the radar for an opportunity, ideally to go long this market. I'm either looking for a better price between 47 to 49 US dollars per barrel on a setup, particularly if previous resistance here turns into support. So we just see a rotation lower here for oil, come back to support and use that as a buying opportunity to then go higher. Or if we just don't see any sort of pullback, but we just see a consolidation and then a pop up higher, I'd also look at that as a buying opportunity as well. Now moving over we'll have a look at platinum and also palladium. Right now, platinum and palladium, I still favor silver at the moment. It's the leader out of the precious metals. So if I'm going to add positions to a metal, it will be silver, and also like gold's current formation, if it can break above last week's highs or above 1,265 US dollars per ounce. Palladium at the moment has been grinding lower, but it's come back to a major underlying level of support. If we have a look at that on the chart, you can see where it is just battling with around about the 635 level here. So if we do hold support on that level and start to rotate higher, that could also provide an opportunity to enter a position here with palladium. It is getting quite oversold in the short term. Previous resistance could turn into support, but still I favor at the moment silver and also a buy on gold if they can break out above their resistance levels. Okay, so if we just go back over to gold and silver, I'll just show you that again for those joined later in the session. So essentially on gold, we're looking to see whether we can get follow through in a break above 1,265 US dollars per ounce for a buying opportunity. And on silver, we'd be looking for a break above $17.85 an ounce here for opportunity as well. So those are really what we're looking at for the next breakout trades here, guys. So with that said, if you do want to get kept updated with all of the positions that we're taking at the gold and silver, with all of our live trade ideas shared with you, ready to implement for results, where we provide you with our exact entry, take profit targets, stop loss on all of the trades that we're taking at the Gold and Silver Club. You can check in at any time to view our open positions, the trades that we have. Very simply, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. So to get exclusive access to our private members live trading room, you just need to go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you. Who's it for? Well, whether you're a new trader and you just want to develop a solid understanding of the markets and fast track your results, or even if you are an experienced trader and you're looking to take your trading to the next level, private members live trading room is definitely something for you to consider. Now, as we mentioned during the course of today's training, as a newbie, or even if you're an experienced trader, it's important that you're always continuing to learn and that you get the right information as well, and you continue to, of course, attend webinars, attend trainings, attend seminars, invest in yourself, because you want to fast track your progress as much as possible instead of making very expensive mistakes yourself. So a lot of traders who come to join us, students who come to join us at the Gold and Silver Club, depending on their previous experience, they might well have gone through their own education in the markets, which often can be quite costly if you don't know how to manage your risk, if you don't know how to have a trading plan, if you don't know how to manage stop losses, take profit targets, how much you should be risking per trade. All of that, of course, we help you with at the Gold and Silver Club. That can help fast track your results and also stop you having a lot of pain in the market. It can avoid a lot of costly mistakes which you shouldn't be making if you know what to do and you have the right education. So as part of the Gold and Silver Club live trading room, you of course get access to our webinars. So private members get access to exclusive live trading room webinars where you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out highly profitable trade setups, sharing exact entry, exit points, profits, stop loss targets, as well as walk you through live trade ideas ready to implement for instant results. Now, alongside that, you get real-time trade notifications alerting you when to enter a trade. All notifications include exact details of where to enter, exit, place a stop loss, and those notifications are sent out in advance notice to make sure you've got lots of time to get into every single position at the best possible price. And you get access to commodity research and market insights. So you get exclusive access to our proprietary trading research and market insights to help boost your win rate and ensure you're on the right side of trades. Our trading research is there really to give you the ultimate edge in the markets and fast track your results. So again, private members live trading room include exclusive weekly live trading room webinars. You get live trade supplement for instant results, real-time trade notifications via email and SMS so you don't miss profitable trades. You get exact details of where to enter, exit, place a stop loss. You get a weekly trading plan with a watch list, trade is for the week ahead, live trade support to help you successfully through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the market. So to get exclusive access to our private members live trading room, just go to www.jointhegoldensilverclub.com, complete the application form, and we of course will get in touch with you ASAP. Okay guys, so with that I'll just drop the link into the chat there for you. Okay, fantastic. And yeah, with that, guys, I hope you enjoyed today's training session. I wish you all the best, good trading. Have a fantastic week. And of course, we will speak to you very soon. And I thoroughly look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. Okay, guys, all the best. Speak soon. Bye-bye. Talk you through some of the opportunities